The net profit has come in higher by almost 22.5 times. The EBITDA as well has jumped up 2.8 times, and the margins as well have seen a fair amount of expansion. So let's try and understand the quarter went by and what lies ahead a little bit better. Dipali Goenka, the MD and CEO, joins in on the show right now. Dipali, hi. Good to have you today on ET Now. Dipali, your revenues have risen nearly about 19%. The demand environment clearly is looking favorable right now for home textiles and flooring. But your sales growth guidance, Dipali, at 10 to 12% would seem rather conservative on a base like this. What's driving this caution?
The caution is the global economy and the scenario as you spoke about right now. And, amongst the turmoil and the war as a backdrop, I think that's what is concerning right now. And we feel that despite all this, we'll continue to achieve our commitment of 10 to 12% growth and 15% EBITDA. And I think India is in the right position globally if I look at my core businesses. And of course, the domestic businesses have, we've seen the retail segment be a little slow comparatively in India. But I think, owing to the whole festive season coming up, that also will see a little upside there too. But yes, there is that cautious optimism that will be there in whatever I say and commit.
Absolutely. And one of the key concerns for investors was, in fact, the sluggishness in order inflows, recessionary conditions in key US markets or key markets like US and Europe. But the situation is different now. Tell me, how sustainable do you think the recovery is? Or would you say it's early days yet and you can't really tell how US and Europe are going to pan out?
So let me just first give you a perspective about United States of America. Right now, even when you talk about our quarter, it is also owing to a backdrop for the festive season that's coming in. In their quarter four, our quarter three, the Black Fridays and, the Christmas. So I think that's where, the prep happens and hence the order flow is. But if I look at even US, the retail resilience is still holding on in September. So that's what is the positive streak that you see there. However, Europe and UK are slow. And I think, let me just say that they are still struggling. But USA continues to surprise us, honestly.
Good morning. Nikunj also joining in. Now, my understanding of the cycle is that the upside for the Christmas for both US and Europe must have got captured now. So when you're saying slow, are you referring to the Christmas and the New Year season, or are you talking about the next year?
I'm talking about the entire year, Nikunj, and glad to have you and glad to meet you here. But the entire year this year, I will see that, our half fund has continued to grow. And this year, we continue to grow at a rate of around 10 to 12%. But, the season time, retailers stack up inventories for the new season, and hence, there's definitely an upside and they prepare for the holiday season, which they are going to be quite bullish about. And because people are, buying offline now, and that's something the retailers have seen that, people want to have experiences outside. They're shopping outside, and retailers are preparing for that for United States of America, for sure.
Guidance what you've given, are you also baking in some degree of currency advantage?
So that is there, but it is minimum here, Nikunj. For us, this guidance is pure in the terms of performance, actually. Yeah.
Okay. The biggest moving part for Welspun, I think, is cotton prices. And they have been notoriously volatile. Given where cotton prices were and where they are right now, how will this change the scenario for you?
Nikunj, now let me give you a perspective about cotton and the MSPs, right? When we see what is an MSP driver and the difference between lint and the seed, right? So we see the oil, the oil seed going down, and we definitely see our MSPs being around 57,558, and that is your base that you see right now happening. And as we go forward, the cotton prices are going to be the same, like 61,000 to 62,000 next year. That's what we are anticipating. And that could be the base that we will start off from. However, I think we learned our lessons very well last year. So we are definitely being very cautiously optimistic about how are we going to be looking at our commodities. And we have around 4 months of stock. And as we go continuously and the season's opening up, we'll continue to buy. And we are definitely going to be capping our risks on the commodities as well, Nikunj.
You moving into the flooring business, it's a margin, the EBITDA margins for the flooring business are nearly half of that what you have. Don't you think you would be damaging your return on investment by expanding?
I think, Nikunj, let's face it. I mean, we've been talking 2 years now, and flooring business is pretty new. Our emerging businesses, let me tell you one thing, has contributed around 31% to our top line. And our flooring business has grown 52%. It is a huge opportunity for us, not only in India, but as well as exports. I think India is in a right position in the terms of the China plus one here. And flooring is definitely, getting the tailwind from that side. So yes, right now, as it is growing, the critical thing for us is to focus on the indigenization of the supply chain, which we are doing. So as a result of that, as we go forward, our margins will definitely improve as well. And as the top line increases as well, and I think we have seen that upside of 52% growth. And I mean, our exports have had a growth of around 82% in flooring itself.
What's your outlook when it comes to the net debt? Because that on a sequential basis has reduced. Are you confident of bringing your net debt below 1,000 crores by the end of FY24?
Absolutely. And I think that's the goal that we have. And that's my personal, lookout. We definitely will have that. Can you hear me? I think I see it freezing.
We can hear you loud and clear.
Our net debt below 1,000 is what we are looking at. And any other investments also we'll do going forward, will be with the prudence of the ROC and IRR. So yes, that's absolutely very, very clear, because I'm very clear on a few things here. The opportunities remain for India as a country, and we'll continue to explore that as well.
So what is the code to crack the domestic market? Would you be looking at store expansion more? Would you be looking at perhaps going online more? Because the Indian textile retail market, it's not an easy market to crack. I mean, I know you have a leadership position there, but every time when India is growing, I'm hoping that you will get more and more news from you.
That's an interesting one, but I'll tell you one thing. We've seen, our journey I'll tell you myself, Nikunj, my journey from 2003 till now, it's a long one when I launched Spaces in 2003. But I can tell you, this is growing. We all know that the rural India was a little slow in the Q1, and Q2 also was a slight offtake. But as we go forward, it'll start going up. But the urban and the modern India did well, and the premium segment did well. So I can say that in India, for me as well, Spaces is growing, and it is the highest selling brand in the modern retail. But now when I talk about the selling of my brand Welspun and the MBOs, India is, let's face it, going to be a mom and pop dominant backdrop. And we now have around 15,500 stores. And there has been a little, flattish kind of a look, which we are anticipating to grow in the next, the festive season that's just right around the corner. But Nikunj, I definitely feel that the consumers are evolving, and we have seen a CAGR of around 30% here. And I think there is that positivity, and I feel very positive about the retail segment in India and the consumption too.
Dipali, for joining in and sharing with us your growth targets as well as the outlook on the business as a whole.